IRS versus state tax debt, which do you want to deal with first? Now, I'm going to give a very general answer here. This is not the answer for every specific situation, okay? But in general, just speaking at a high level here, in general, where my mind would go to first, unless there's some other fact pattern going on that would make me not say this, where my mind goes to first is to deal with the state tax debt first, okay? 3 reasons for this, okay? Woody's just hanging by a thread here. I think I got thrown away. Sorry, Woody. Sorry. Reason number 1, why I think you should deal with your state tax debt first before your IRS tax debt is because states are generally more aggressive than the IRS when it comes to collections, okay? Now, this may not be the case in your specific situation. You may have an IRS revenue officer breathing down your throat, and the state may be asleep at the wheel, okay? But in general, state collections move faster, and they're more aggressive than IRS collections. So it's kind of a monkey you want to get off your back faster, okay? Reason number 2, why I would figure out a resolution with your state before the IRS is that the dollar amount's probably smaller, and therefore whatever resolution you get into is probably going to be an easier financial hit for you than your IRS resolution, okay? I mean, unless you qualify for a really low dollar offer and compromise for both, then it's kind of neither here nor there. But the reality is for most folks, states are so aggressive, so much more aggressive than the IRS, so much more reluctant to do settlements than the IRS is, that the best you're probably going to get with your state is probably some kind of installment agreement, okay? Some kind of payment plan, all right? And that leads me to the 3rd reason why in general, I would say tackle your state tax debt first, is because that payment you're making to your state, you can actually use that to reduce your monthly disposable income for your IRS resolution calculations. Yes, you can. Now, sometimes a revenue officer can push back, and there is basis in the IRM for this to kind of prorate your payment between what your state tax bill and your federal tax bill. But 9 times out of 10, if you're dealing with ACS or maybe half the time with a revenue officer, they're just going to allow you to deduct whatever that state installment agreement payment is from your monthly disposable income, whether you're calculating your offer and compromise or your partial payment installment agreement amount or trying to prove CNC status. They will generally just take that amount as is. Now, there are exceptions, of course, right? If you're going to pay off the state in like a few months, they might do a step up on your installment agreement, right? Give you credit for that. That payment for the next 3 months, and then say stepping up your installment agreement to whatever your new monthly disposable income is without that payment. But in general, that state installment agreement payment, which is generally the best resolution you'll get with most states, does come in handy when dealing with the IRS.